There's always something to buy and or sell. Welcome to another show, Stock Market Analysis with TerrenceRe. And we're going to talk about relationships between um, different products and how to trade those relationships right after the buffer. So right now in the market, we got the VIX futures down about 1%. I'm right over here on my watch list. The VIX futures is down about 1%. We got the S&P 500 futures up, about a quarter of a percent. Nasdaq futures up almost a whole percent. Dow futures, this is basically relatively flat, to be honest with you. Now the big movement is in the bonds, and if you can see it's almost up a whole percent. That is /ZB. That is your 30-year Treasury bond. And the ZN is your 10-year Treasury note. Now they're relatively, I would say. Oh, another thing before I get into that, the yen futures are up. They're up almost 0.67%. So looking at these, you may say, why am I going over these ones in particular? And I would like to add that oil futures are down /CL are down 4%. That's a big mover on the day. I'm gonna try to keep my and go through these and talk about these relationships and why they're important. Because you just looking at that, like I could, without looking at a screen or a chart, I could look at that watch list and then and visualize in my mind what the market is doing. And that's because, and it's the reason why I have it set up that way and why I watch them. So right now we're in a rate hike period, right? So the Fed has been raising interest rates. And if we look at, and I'm going to pull up the TLT, which is an ETF of the bond market, basically. You look up here, it says iShares Trust 20 plus year Treasury Bond ETF. Now, if we look at this, now this is a year chart, and we could see up here around, look, what's this high? The high back here was what, 155.12, and that was December 3rd. Okay, so we can see that ever since basically they've been raising rates. Look at it, the bond has been dropping, right? So the bonds have been dropping. Now let's go look at Treasury yields in that same time frame. So we're gonna look up. I just want to pull up the spot price because the chart looks better. Now look at that. Now you see how the Treasury yield is up, right? So think about it. If we have a higher interest rate environment, you're going to yield more on Treasury, like your Treasury yield. So you're going to yield more. Like if you loan out money or you're sitting on money, um, you're gonna yield more. You're gonna draw more interest on it, right? So just look at it as something easy, just like that. Or you're gonna pay more interest because the interest rates are going up. So you're either paying more interest or you're yielding more on your money, like any loaned out money, any lent money, or investments, or money just sitting in savings account. Or if I don't know if you guys have noticed, banks have been, giving out more just for money sitting in the bank, right? So you can see this inverse relationship, right? That's why I named this video relationships. So you can trade this, like here on the TastyWorks platform. you can actually get long. You could have got long the 2 year yield, the futures, right? You could have just bought the future and you would have been making money this whole time. So there's always something that in the stock market, markets period. I don't care, stock market, future market, forex market, um not quite yet the crypto market, but it'll get there where you can trade. Like, if something is going down, then that means there's something else that's going up. You just have to be able to find what that is. So you may not be comfortable shorting the market, but you're just comfortable with buying. You like, man, the options and all that other stuff is too much for me. So just find the stock that reacts to what you're losing money in, and find that other stock that has an inverse relationship to that stock. And I'm going to go over some of those in this video. Hit that like button, hit the subscribe button, and share this video. So let's talk about, I've already gone over yields and bonds, right? So as interest rates have been climbing, the bonds were going down, right? Now, what do we see over here? Kind of looks like the bonds have started going up, right? Look down here at the bottom. I'm going to make this big where you can see it. So it looks like bonds are starting to go up. And you may say, well, Ray, they still raising interest rates. Is this a signal that the Fed is going to that they're going to slow down? Just think about it. So if you watch some of these shows, some of these financial shows, you'll hear them sometimes say the Fed is lagging, or they'll say it's already priced into the market, or they'll say the Fed are using lagging indicators, or they'll say that the Fed, you may hear them say the Fed is they're gonna overdo it, right? Because they're not really um reacting to live markets. They're not. They're looking at data, and then that data comes out. By the time that data comes out, they're looking at maybe data like a few weeks ago, a month ago. So by the time they get that data and then make a change, the market has already changed before they make their change. I know that seems weird, but you're looking at it. You're seeing yields begin to drop. Let's go back to, look at the 2 year. And the 2 year is the most accurate one to watch, in my opinion, because they have more control over that. That's a more immediate change. The 2 year, and if you can get a chart of like a 30, like a 3 month or something like that. So you can see we almost got something like a triple top. Like you got a high here, low, high, low, high, or something like what it could form a head and shoulders, possibly. Head and shoulders, this would be one shoulder, that would be your head, this would be your other shoulder, and it would have to take out this neckline right here, break this neckline, and then we could get a down move and a reversal, possibly. So we haven't gotten that yet. So that doesn't mean that we're going to get a change, but we're starting to see a slow in the rise of the yield. And we're starting to see bonds slowly creep up. So that's just one relationship that you can trade. So I'm gonna give you some other things when you hear like so let's look at oil, right? So oil is down. Oil is getting creamed today. So if we looking at a yearly chart, look at this. Oil was way up here and we're starting to see it come down. Okay. Um Now, it doesn't matter why. I'm just dealing with different relationships. So a lot of times when you see oil react like this, and I know you may not be in the futures, just bear with me. So oil may be acting like this. So we're gonna go to the XLE, which is the energy ETF, and you can see the energy ETF is up, right? This is one of the ways you can kind of you can trade oil or get some exposure to um, oil, because it's going to be, a lot of times it's some oil stocks are packed into this energy ETF. So you see XLE, right? So let's take a look at ExxonMobil. See, the chart looks similar, don't it? What is ExxonMobil? Okay, let's take a look at Chevron. And, let's take a look at Chevron. Looks similar, don't it? Now let's go back to XLE. I just want to show you guys that looks just like Chevron. So I showed you some oil stocks that are up, and I showed you the energy ETF. So any one of those three. Now let's get into something like, so when energy is beasting like that, let's look at another sector that maybe could give us, that chart shouldn't look so. Now look at XLU, which is your utilities sector, right? So it doesn't look, it ain't quite as up as XLE. So these are things, so you can go to, you can do sector wise. So you can say, well, I'm gonna take something off on XLE. Maybe I'll come to XLU. Maybe I'll come to, I don't think the technology fund would be. You see how low it was, like right around here. So you could have got in on the lows of the technology fund ETF. Let me get this off of here. Come on, take that off the screen. Uh, remove drawing. Yes, there we go. All right. So you could have came here. So once again, I'm gonna pull up the XLU chart. Now we're gonna go look at the XLE chart. So you see, and these are some of the things that you can do. You can do the same thing. If I was to pull up, look at the yen chart. This is the yen, the Japanese yen, which looks like it's getting ready to make another break. You see, I already got. You just can't trade everything. That's what I was talking to a coworker, talking to my guy Kyle, um, yesterday, about like capital. A lot of this game is having the capital. These guys you see on TV and they talk about these superstar traders. In my opinion, they really not superstars. They just got the capital. I'm gonna give you an example right now. And as soon as I get done on how not to go broke. So I don't understand how these guys go broke and they got these accountants and they paying them all this money. And then give me a couple minutes and I'm gonna talk to you about how not to go broke. So you got the Japanese yen. You look at you guys see that? Look at this chart. And it looks like we getting ready to get a break here, possibly, and go higher. I don't know if I still would get in right now. I would have liked to have been in somewhere on the pullback, but I did trade this. Excuse me. I did trade this back around in here. And when it popped up here, I took the trade off. So if you go back and look through some of my previous videos, you'll see that. So let's go. I wanted to show you the inverse to the yen and why I have it here. The yen is generally showing me what the dollar is doing. So we're looking at the yen. So generally, like what'll happen is traders will get into the yen when they want to trade the dollar. So let's go look at the dollar. Let's get a chart of the dollar pulled up. Look at it. See that? You see this chart right here? You see how it's down, but the yen is going up? See how we got a red day in the dollar and we got a green day in the yen. There's always something to buy and there's always something to sell. You just got to know what it is, and you got to know what the relationship is, and you can trade the relationship. And sometimes you can trade both of them as like a, almost like a, kind of like a spread trade. And that's a little bit more sophisticated, but you can do that as well. Or you can just, if you short, like let's say you think the dollar is going to drop, then you can come get long yen. So that's another relationship. And also before I lose my train of thought, let's go back to, so we talked about energy XLE and then XLU utilities. Um, we talked about, just recapping, we talked about bonds and treasury yields, that relationship. We talked about the relationship between the dollar and then the yen. And now I'm going to get into how not to go broke, because I don't understand why these guys, entertainers and rappers or whomever, have all this money, hundreds, and end up broke. And they say, well, we were talking about this yesterday. I read a post on Twitter. Guy said, if I gave you $1 million, what would you do? What stock would you buy? And I said, um, I'd buy the TLT. You know, my guy was like, well, it's not really a stock, but it's. I'm like, well, it's on the New York Stock Exchange and it acts as a stock. So why would I buy the TLT? Right? And let's just say this price to make the math is easy is $100, but it's only $2 off. So you can get 10,000 shares with $100. I mean, you could with $1 million. I'm sorry. So if you had $1 million and you divided it by 100, you could get 10,000 shares. Now TLT pays a monthly dividend. I mean, every month it's paying 24 cents. So that times 24 cents is gonna give you $2,400. Right? That's just with a million. So you ain't say, man, that ain't a lot of money. But these guys blowing big money. These guys have got billions. I think I was listening. With everything going on with Kanye West, I think J.P. Morgan like gave him his money back. Like he had to take his money out. I think he had like $120 million just sitting in there. So I'm like $120 million. So I'm already at 2,400. So I'm like, man, what could you got that kind of money? I imagine you're just buying you're not paying car notes. I would think that I would just buy the car, and I wouldn't have to pay on it because I don't want any debt, right? I want to own it. I ain't got to worry about it. You coming to get it from me if something happened and you drop me from a label, my car, at least I own the car, or at least I own my house. At least I would anyway. So that stuff be paid for. If it was me, I don't have that. I don't have nothing but utilities, right? So with 1 million, it's gonna net me $2,400 a month. So these guys got multiple millions. So let's just say 4 million. So 4 million, I could get 40,000 shares. That's gonna net me in dividends. That's $9,600 a month. All right, $9,600 a month times 12 is $115,000 a year. I can live off that, guys. Especially when I've taken my cash, the money that I've made from these big signing bonuses and shows and whatever. From an athlete, I got a signing bonus. I done paid off. I'm paying for my house is gonna be paid off. My car, everything is gonna be paid off. I ain't gonna have no debt. And so now I'm collecting $115,000 a year. That's just on $4 million. That ain't on like this guy had $120 million just sitting in an account. It's like, dude, 4 million of that, and I got you 10 grand coming in every month. And you say, well, what if the stock drop or whatever? What if it did? Look, the stock been dropping, and they just paid out a dividend on November 1st. Come on, man. Like I'm not. Somebody help me understand. I'm just saying this just for $4 million. This ain't. I ain't got. They say MC Hammer back in the day blew 30 mil. Oh, come on, help me understand. And with my knowledge of investing, even doing this down, little down right here, I just showed you how to trade this relationship. So not only it ain't even no guarantee that you losing money, because I'm not gonna lose money through this because I just showed you what to do. I just showed you to just go ahead and just buy the 2-year treasury yield, or sell calls against your open buying position. That means like if so that means if you own um you own all these shares. You just be coming in here as this market is going down. I'm out here. I'm selling calls. I sell this call right here. I'm selling calls all day. That's $125. So how you just up it. I mean, hold on. You just up the quantity. Say you about 10 of them. You're gonna need more than that if you got 40,000 shares, right? Off of 4 million. I'm just giving you guys examples. Or if you don't even want to mess around with the call position on the ETF, I come right in here and get to the bonds and just be done with it, right? I would have been shorting the bonds outright on the way down. So I still would have been preserving my capital. Meanwhile, I'm eating them dividends. Them dividends coming in every month. Hey guys, hit the like button, hit the subscribe button, share the video, because you're not this right here. This is how you do it. This is how I don't know who they have watching their money and who they have advising them on what to do. And ensure your gold chains. If you got it, you're a rapper, you got your nice chain. It don't make no sense to fight with nobody about the chain. You ain't gotta argue, you ain't gotta pull your pistol and anything like that. You don't have to do it, you don't have to do any kind of violence. Let them have that chain. Give it up. It don't even make no sense to fight over it. Just insure it. That's all you gotta do. Get you some insurance on the chain. They sell it. So, with that being said, guys, I hope you got something out of this video. Um, went over I went over a lot, and I made good time. I made good time. So, guys, hit the like button, hit the share button, subscribe, hit that bell notification so you know. Because sometimes I like to do spontaneous videos and go live if I see something going on. That way, it'll come up and you'll be able to get notified right away. And with that, guys, I'm out. Peace.